All right. Good morning, everybody. Stock Gamma AM edition Founders Note is already out. They provided us with a little bit of a roadmap. I get it. If you don't speak options, you may be looking at this thinking it's complicated and you don't understand. But I continue to try to point out that there's always some plain English in there. It's not all geeks and Greeks. Above 59.50 will be a negative gamma. Think of that from the standpoint of what dealers do to protect their books. We're going to have a hard time moving higher when we get above 59.50. We'll be in the neutral zone around 5,900 through 59.50. It's a bit of a window. So we can chop about and make violent moves from top to bottom, bottom to top. And then below that, we don't really get any help or support until 57.50. So if we get above 59.50, which is where we're really going to be hitting our head, right? That neutral zone. We can expand considerably. When dealers are in a negative gamma environment and we go up, they will buy into buying. They buy into strength is another way to say it. And if we were to fall when we're in a negative gamma environment, then they will sell into weakness. Now, how deep we are in a negative environment really is important. If we're only slightly negative, then they don't have to work so hard. They're not going to try to hedge too much. But if we are in a deeply negative environment, then they have to work a lot harder because the impact on the notional value, penny for penny move, is heavier. So they have to work harder. We could rip from 59.50 into 6,000 relatively fast, but we would have to get above that 59.50 first. And this is the SPX, not the ES. So take a look at the Founders Note. I know it. If you don't trade options, it may be a bit much, but Spot Gamma also has the resources page. And even if you're not a member, you can go there and you can read about call walls and put walls and gamma and notional value and all of it. You can read everything that they have to offer that explains their tool without having an account there. Markets are still up from a lot of different things. We had the NVIDIA earnings, and then we had a court ruling against the tariffs. Now, there's a couple of things with this. One, he was trying to slip the tariffs in under this rarely used rule or law, which was just strike down, saying, no, that you can't use it that way. What's to stop him from just using another rule and applying the tariffs again, right? Plus, he's appealing, so that's going to keep everything on hold. And then there's the idea of the bond vigilantes. Now, we saw them start to poke their head out around April 5, 6, 7, right before he capitulated, and we heard a new tune coming out of the White House. They just got that big, beautiful bill through the House. They're sending it to the Senate. He's now fighting with Musk about, spending and all the work that Doge had done to reduce spending and waste and the deficit. And then here's this bill, and that it has to be paid for, right? All of these things that the administration wants, you have to pay for it somehow. And he was supposed to pay for it with tariffs. Well, if the courts strike down the tariffs, they don't have the money. Either the bill doesn't get passed or it gets passed, but then it doesn't have funding. The money's going to have to come from somewhere. They'll look towards the bonds, right? Just print more money. The bond vigilantes are going to show their displeasure with that scenario. And it's likely that we see some serious violence that looks a lot like how the markets did around April 2nd, 3rd, 4th, and 5th. If you don't remember what that looks like, just go back to those really big red bars when you look left on the S&P. So we don't know if the bonds are going to be an issue because we don't know how this tariff situation is going to turn out. But the idea that the tariff thing is done, nah, I don't think so. You know, and sure, the initial reaction was everything's up this morning, big pop, everybody's celebrating, but I think that might be short-lived when the market actually gets to chew on what the ramifications are. We are going to get some job numbers this morning. We're not expecting anything out of line. You can see 230 and 227. One is the forecast, that's the 230, and 227 is the previous. So if we're looking to see if new people are on unemployment, the number hasn't radically changed, and it's still below the critical number. So unless we get some surprise off of this morning, shouldn't be too bad for the morning session. A surprise that would help propel us higher would be a lower number, getting below that 227 and coming in like 225 or something, and something that would likely stall us or maybe kick our legs out from underneath us would be coming in above 230, say like 235. If it's just a little above or a little below, it's likely not going to be much of anything. Got a lot of Fed speakers today. I don't see it here, but the Secretary of Treasury is going to be interviewed on Bloomberg. I'm pretty sure they said today. They mentioned it as coincidence that they happened to be doing an interview with him right after this court ruling on the tariffs. And now, they're going to get a chance to ask him, how are you going to pay for everything? And he's really changed his tune. If you follow along with QRA, the first two QRAs that we've had under the new administration with this secretary in place, he's just been using Yellen's playbook. That's, bond and bills. He just left everything the way it was. Well, he's digging deeper into that. So we're starting to see some significant changes in the language and the wording coming from Secretary of Treasury. The interview today may be more impactful than anything else we're going to get today. So I got to hunt around and find when that interview is, or if it is today. I may have heard them wrong. Maybe it's tomorrow, but I'm pretty sure it's today. Once I find it, I will let you guys know. Or if one of you wants to take the initiative and find it before I get done with this stream, then awesome. We'll share that info. Got a lot of data out of Japan tonight. We should see that tomorrow. And if you remember, through the overnight last night, we had a couple of countries that were closed for a holiday. So we should see that lower participation when we get into the volume on the charts. We got auctions today, lots of Fed speakers, and we should get crude oil today, even though there was a bit of a discrepancy yesterday on whether we were going to get it yesterday or we were going to get it today. There's the inventories number. Should be at noon, which is a little odd. We usually get oil at 10:30. So, it's just got to adapt. It's the short week behavior, and that's what happens on short week. We have Costco earnings tonight, and this one has the capacity to move the market a little bit, not because of what they're going to say on their own company and profit and loss. It's more of their outlook. Like Walmart has a lot of influence when they discuss what their research says about the state of the economy and shoppers in general. Well, Costco's not as powerful as Walmart when it comes to voices that can move markets, but it is one that gets watched. So, there is a little bit of a threat that we may hear something from the Costco earnings that the market doesn't like. about a slowing retail. It's a lot going on this morning, right? There was an analyst this morning that was talking about NVIDIA's ability to make money even with the restrictions and blockades that are being put into place. And while he didn't come out and say that there was, anything shady in the books, um, he left, he left it open to as where are they making this money from if they're not getting these sales from A or B or C, right? If that was why they said they would make X amount of money, and then they didn't get those sales, but they still made X amount of money, how did they make that money if they didn't get those sales? We'll see how it goes, right? It's not good when they start attacking the biggest driver that's holding up the entire marketplace, right? All the capex from the hyperscalers all tie back to NVIDIA. You attack NVIDIA and kick the legs out from that one, wiping out the hyperscalers, and then you wipe them out. It's a domino effect. They asked Trump about the taco comment. He did not like that, by the way. If you haven't heard it, just search around. It's the idea that he always backs off. Chickens out, I believe, is the comment. Trump always chickens out, TACO. Yeah, that's all over Bloomberg this morning. He did not like that at all, but they're just poking, right? As they would no matter who was in the office, like to poke him. But it's funny because we were just talking about that yesterday and the idea that, no matter who's in power, you probably don't want to get sideways with that person. When we have this Q&A today, we got Goolsby with Q&A, Barkin. This one's too late, but Dally this afternoon. That's where we have a chance to kind of screw things up. That the reporters can take them out of context. They can misquote them. They can say something they inadvertently didn't mean to say. There's a lot of things that can go wrong when they're taking Q&A. The put wall is still rolled up. I went back and looked. It's not the first time that we've had the put wall above the volatility trigger in zero gamma. Obviously, it doesn't happen a lot. The question yesterday was, with this rolled up put wall, was it going to stay there or was it just a 1-day wonder and it was going to fall back down again? Well, it's still there. When we see a put wall rolled up, especially a significant change in the put wall, this isn't just a minor move, right? It's a big deal. It is perceived as a bullish action. But on the other side of that, the call wall has not been moved yet, which on the face of it, it's how do you prove a negative, right? I don't know if you guys have had to make that argument before in college, but the fact that the call wall didn't move isn't a behavior. If they had rolled the call wall down, we'd say, oh, that's bearish. If they rolled it up, oh, that's bullish. It's just sitting where it is. The fact that it's sitting where it is fine, except that the put wall got rolled up, which makes it not fine. We want to keep our eye on both of those two to see which one's going to move. Now, when I was looking back today, what I noticed a lot was that the put wall would get rolled up. And then if the call wall didn't move, that the put wall would get rolled back. So base case is that if 6,000 continues to hold and we can't get through it, the call wall isn't going to be moved. Maybe likely that we don't get through the 6,000 because the call wall didn't get moved. And then they end up back in the put wall off. We'll see. At this point, we're still above all the major moving averages. No surprise there. And even with three nations not participating in the overnight volume due to their own holidays, we have elevated volume in the overnight last night. We've been trending back into our more natural overnight volume below 100. And this morning we are back above 100. So, on first blush, everybody liked this news that we got. Really nice tag on the 111 yesterday, by the way. It was the best one, best trade of the day. I think that's my favorite trade out of everything that we can play on the intraday. Previous day's 111. We got really close to 6011 cog line, the upper ADR level up here. And since then, of course, we've started to give it back. It's very likely we're going to give most of it back. There's the idea of the liquidity gap. I don't expect that. But if we get back inside of yesterday's range, then it has to become a possibility, right? That we would go all the way back down to the close yesterday. It is a significant gap that we left behind. And as long as we hold outside of yesterday's range, then there's no reason to suspect that we're going to go back down there and get that closed. Should we open that door and get back inside of yesterday's price, then yes, that becomes the target. For me, it would be get back inside of yesterday's range. Then we have to worry about yesterday's RTH open. Get through that. You could lay out the 50% mark. So if you just want, yesterday's half, it'd be 59.22. And then yesterday's low. The half of yesterday is close to the Globex low of yesterday too. We'd also have the round number 5,900 before we hit yesterday's low. And it's more likely that 5,900 would be more helpful than the low of yesterday. Up at the top too, when we're fighting yesterday's high, we're also fighting 5,950, big options level. Either way, we need to keep that. Just keep in mind, we can wick into yesterday's price and then come back out of it again. So don't think, that just because we step one toe across that line that, oh, well, it's done because we're back inside of yesterday's range. The other bit about this that's worth talking about is what I've mentioned before. If we're inside of our own Globex price action as we get into the regular trading day, then we're likely not going to have much of a trading day. But this is a little different because our Globex range is really wide. So we could stay inside of this price action all day today. It's 100 points at least. And we can just move around in here all day long. And yet we would still be inside of yesterday's price action. So that comment about if we're in our own Globex range or if we're inside of yesterday's price, that it may not be a decent trading day, it doesn't apply to such a day as this, where we've got well over 100 points of range that we can move around in. And if we get to one ADR early enough in the day, we can go to the other ADR by the end of the day. I know that may sound a bit odd, but we got there early, right? So we have the opportunity to go to the other side by the end of the day. And that wouldn't be bearish on the face of it. I know going down like that would make you think, bearish, but it's just a wave, right? And the wave's going up and down. There's peaks and troughs and valleys. So we can get to 58.79 by the end of the day today. I was curious on the distance from the weekly pivot. We're not even 3%. So we haven't outrun the weekly pivot. We didn't get too far away. It's not owed any sort of pullback. We have a very narrow channel today on the daily floor pivot, which implies that if we break out, it can stick. Well, surprise, we broke out. And sure, it's stuck most of the night, but you can see after the European Open, we've really been giving it back. We had a little bit of a bump. Europe opened, we dropped down, tried to take it back again and couldn't keep it. Now we're just giving it back. And so far, that's been the move, right? We're just giving it back. So it's very likely we're going to get this floor pivot tag. Curious that we almost had another MVP yesterday, but almost doesn't count, right? We actually did hit it. So we're done with it. Today's floor pivot being very narrow in the channel implies that we keep this breakout. But again, like I mentioned every day, these channels don't make price do anything, right? They just give us insight on what to expect if we get a breakout. I expected less of a bump up here, but we put in a lot of work at 6,000. You can see that well on this profile. We ran through last week's point of control like it wasn't even there, right? We can see that run up here and the move back down, which is generally the type of behavior we would expect to see in a shallow area like this, not in a high volume zone like this. The point of control for this week, 59.24, still headed back in that direction. And it's the expectation at this point, we'll go back into it. It all comes down to holding above 59.50 or not. Ten-day, 30-minute volume profile with TPO. The point of control on both of these are lined up. We're going to be wiping out in the next few days the volume that made up the point of control and the TPOs on the volume profile. At that point, we're going to have to start to consider where are we going next? Where's this point of control actually going to move to? And at this point, we don't have anything good. It's likely that it drops down to this lower level, 58.50 area, since that will still be on the table as this is getting wiped out. So base case, that's where we see it go. It may go up first for a day, maybe two, but then it'd be down here. So we got to just let it play out. This is more of the classic D shape profile, and it's good to see because we haven't had a classic shape here for a while. Just got to let it play out. We did not develop a new VPOC yesterday because we ran through it when we opened last night. We did take out those two previous VPOC levels, just smashed them. One we had hit yesterday anyways, right? That 59.50, but we hit the other one after hours in that push. So it's done. Both of those are out of the way. We don't have a new one today. We are developing a bit of a classic P-shape profile. We do have to let it play out. And we can see a little bit of defense. They're putting in a lot of work, but it didn't hold up, right? It's just fading out. And they match really well this morning. This is light. We didn't leave a lot behind. And that is like a very nice image of why we call it a liquidity gap. Right? There's the gap, nothing there to hold it up. The likely scenario is that we go back and close the gap. But it's not owed to us, right? Because we had another situation like this back here, same sort of thing. It was very thin, a bit of a liquidity gap, and it's still there. We're still 1% above the 10-day, all things being equal. We are where we have been Tuesday, Wednesday, Thursday, still sitting right here. So on the week, our distance from the 10, we've done nothing for the week. We're just chill. But our distance from the 10 week rather than the 10-day, we're back above 3.5. It's not overly concerning yet, but we don't want to outrun that 10 week. So we'd like to see this slow down somewhere around 4%, stall out there, and or start to fade back a little bit. All we have to do is sit tight and the 10 will move to us. We don't have to go anywhere. This is the idea that we can correct in time rather than correct in price. But either way, we don't want to get too far away from that 10 week. This isn't extreme yet. It doesn't owe us any sort of mean reversion, but we're getting a bit ahead of ourselves. All right, China's up the most this morning. Behind that, we've got semiconductors and then the Mag 7 and Bitcoin. That's everything that we would want to have bullish this morning. Chips, hyperscalers, Bitcoin, China, it's all just in a line right up the road. Add to that uranium, right? 'Cause you got to fuel those data centers. Then it gets into more defensives like staples and such. But if we can keep that, then we can continue to run today. We can hold outside of yesterday's range and continue to do the thing. Some of these that are up this morning, they don't get a lot of flow in the pre-market like IGM. It may be hard to see in the stream, but it's all the way up here this morning, basically at 105 when it closed down here. But it's just an algo print, right? It's just a little bitty dash. There's nothing here. It's not like it laid out some candles. And if you go back and look at something like IGB and IGM, if it shows that it's up or it's down and it's just one of those little dashes, that it didn't stick. And a lot of times that's not where we went that day. Here's some examples back here where we were showing a dash that was really low, and yet we opened very close to where we had closed the night before, and we held our range through the day. We didn't go down to that crazy wild algo print. So same thing this morning. Just because it's showing it way up here at 105 doesn't mean that we're going to open way up there at 105. And so some of these that are up this morning, IYH, same thing, big algo print way up here. XSD, same thing. So, take them with a bit of salt, right? Now, take semiconductors, this actually put in some work. It has some candles up there. It's showing that there's more than just an algo print. So it's a nice distinction between the two. Same thing with KWeb. There's actually something here. So as we get into the open, we want to see that all of this sticks. We don't have to continue to stay bullish through the day. We just don't want to see it give all of it back. Holding outside of the breakout zone in any of these is going to be important, right? So SMH, for an example, stay outside of yesterday's range, which, it's doing better than the ES. The ES broke out, but it's already, testing yesterday's high. This is still holding well above yesterday's high. Of course, we got some that are less important, like pot stocks. That's not going to influence the market in any way. Precious metals, like silver, is up as well. Crude's up, but still inside of yesterday's range. It tried to break out and couldn't keep it. Be interesting to see if we get outside of yesterday's range on the other side. See crude break out on the low end. We do have the inventories today, right? So it's worth keeping your eye on crude. If everything else is going sideways after this big run up, if we just stall out and don't have anything to play, maybe crude gives us something to work with. And in the VIX, I am surprised. We're still above 19, but I wouldn't expect to keep it. This overnight push to the upside, I kind of thought that would take us below 19 and keep us there, but nope. We got below it and came right back in again. That would be another one worth keeping your eye on, is VIX getting below 19, like a swag level. If we can get through our own Globex low on the VIX, then the ES can keep the breakout of yesterday's price action. And if we continue to stay down in the VIX, we can continue to try to rise in the ES. I wouldn't look for a tick for tick conversion, though. We're not negative enough in the gamma conditions for that. All right, you got a lot to work with at this point. Keep your eye on those headlines, and seriously, anything to do with the bonds, keep it in focus, because we still had a threat with Japan anyways, and now we're adding this to it, and we just need to see what shakes loose. We're giving up 59.50 back inside of yesterday's range. So level by level, we want to run it all the way back down. Every time we get through one, that opens the door to the next level. And then we go through that one, and then the next one, and the next one, next one. So what I got for you guys. Be careful, be safe, and see y'all tomorrow.